Yo, what is good, YouTube? We are back with another video. If you guys are not in the free Discord, go join it. It is the first link down below. This is going to be a new series because I'm literally running out of video ideas, so I decided, hey, why not make a new series of literally beginner ICT concepts? So we're going to be starting from the bottom, right? The literal bottom of ICT concepts. In the first lesson we are going to be going over is what is liquidity? Right, that's all this video is going to be, is how to spot liquidity as soon as you open up the charts, right? So there's two forms of liquidity. It's going to be old highs and old lows, or fair value gaps, right? Now we are only going to be going over the first one because the second one is a little down the road kind of thing, right? We aren't going to be diving into the second thing. We're just going to be going over old highs and lows, because that is going to be the main idea of this video on liquidity, right? So fair value gaps will be presented in a couple videos. It's going to be a later on video, right? So we're not going to be going over that right now, but it is a form of liquidity, so I put it on here, right? So let's hop into the charts, and we're just going to be marking off liquidity levels, right? So coming into a brand new day, right? Let's say like it's Monday, right? So what is the first thing you want to mark off? Okay, so you come into the day, this is Monday. What is the first thing you do? The first thing is marking off previous day high and low. Why? It's because there are liquidity levels on the lower time frame charts. Now, what is liquidity? Buy side liquidity and sell side liquidity. Buy side liquidity is where buy stops are. Sell side liquidity is where sell stops are, right? So the market goes after old highs and old lows, tags them, and then it could start a reversal, or it can keep going, right? But this is down the road type of things, right? We're just going to be going over old highs and old lows. So you go mark the previous day high, previous day low, go down to the 1 hour. What do you see? On the 1 hour, it's a high and it's a low, right? So sell stops, buy stops are up here. Boom. It's that simple. Okay? So let's go to the daily. Now, where does buy side liquidity lie? Up here, up here, up here, right? So these are buy side liquidity levels, right? Why? It's because they're old highs, right here. Okay, these are swing highs on the daily chart. So these are prominent buy side liquidity levels. Right now, if we go down to the hourly chart, right, remember there wasn't any more swing highs on the daily chart. So now we can mark off buy side, right? Now I wouldn't mark this one off because this is very close to this one, so they're basically just equal highs, because if this gets taken, I'd assume this would get taken, right? Right here, buy side, right? So this is all you do to mark buy side liquidity. Now, would you mark all this off later on down the road whenever you understand liquidity more? No, you wouldn't. Your charts will be super clean, and you'll probably just have maybe this many lines, right? You'll probably just have 1 or 2 lines. That's all you're going to have, right? So those are buy side liquidity examples. Now, if we go to the daily chart, we could what? We could mark off sell side liquidity levels, right? So down here, right here, right? So these are the daily swing lows, okay? So what are we doing whenever we're marking off liquidity points? We're marking off swing points. Those are where the liquidity lies. So if we go down to the hourly chart, we can see, hey, that's a swing low. Okay, so what happened here? Sell side was rated. Now, does this create another liquidity point? Yes, it can, right? So right here, now, if we come higher and get a reversal set up somewhere up here, we could target this liquidity pool, this sell side level, right? So over here, sell side, over here, sell side. All right, and you can literally just keep doing this. Like if we were down here, you'd want to mark off this low and this low. All right, so that is literally all liquidity is. Now, if we go down to the 15-minute, you can start marking off what? intraday sell side and buy side levels. Okay, so right here, right, these are basically equal highs. Right here, sell side. Up here would be buy side. Up here would be buy side, right? So you just do this, right? And then whenever you get further down the road, you're not going to have all these lines marked off. You're going to get a bias and then maybe mark off this and this. And then if we come down here, sweep this, reversal point, maybe if that's your bias, right? So what are the majority? I think you guys literally, like, it's super easy to understand, so we don't have to keep doing this, right? But now we can go into this. Okay, so what is a good liquidity pool whenever you're coming into a new week? Previous week high and previous week low. Just like that, right? And then you come into a new week like right here. What's this candle do? Comes down and takes this sell side. Then you can mark off this candle's buy side and sell side, right? Previous week low, previous week high. Why are we marking those? Because they become daily swing points or 4-hour swing points. Okay, now coming into this week, we can mark off previous week high and previous week low. Okay, now we did have an inside candle on this one right here, but like literally we can just do any of these. A majority of the time, like we can just start right here. One of the above is going to get swept, right? Previous week high taken. Okay, let's mark them off. Previous week high taken. Okay. Boom. Previous week low taken. Previous week low taken. Previous week low. Inside candle. Both previous week high and low taken. Previous week low taken. Oops. Low taken, inside candle. A majority of the time you are going to get an expansion to the previous week high or low. Like all of these candles within here basically took the previous week high or low except for this one, right? All of these have taken previous week low or high or both, right? So coming into a new week, you want to mark off the previous week high and low. Then going down to the daily, you can mark off previous day high and previous day low, right? And that's just going to give you a simple, okay, is the weekly candle going to come up and take the previous week high or low, right? That's going to be your weekly bias. Then coming into intraday trading, don't worry, you guys will learn this going further down into the new series, right? Coming into the next day, is it going to take previous day high or low, or is it going to take it and then reverse, right? So we already took previous day low. Maybe coming into New York session, we get this, right, and take previous day high. That's also possible. Or we keep going, right? We just keep going. Okay, so yeah, this is pretty much it, right? You mark off previous week low and high because they become daily swing points or 4-hour swing points. You mark off daily highs and lows, or previous day highs and lows, because they become your 1-hour swing points, and that can become your intraday liquidity pool, right? So yeah, that's going to be it for this video. It's literally very simple: sell side, buy side liquidity. So yeah, buy stops rest at old highs, sell stops rest at old lows. So yeah, that's going to be it for this video. I'm going to get out of here. Peace.